All right, welcome back, everyone. I think we're still missing a few people, so the food is too good. People are not coming back in. So part 2 of the healthcare keynote, right? I'm kidding. So this is all you're going to hear from me about verticals. I'm going to stop. I'm going to shut up. We'll get the actual industry experts to talk about verticals, right? So it's my honor to introduce Amy Bingham as the next keynote speaker. Amy is the Vice President and CIO at Pekin Insurance. Pekin is a mid-sized insurance company in the US, operating out of Illinois, close to Chicago. And they deal with property, commercial, casualty, life insurance, so on and so forth. I'll let Amy talk about this part. Amy is a veteran in the insurance industry and has worked on many insurance modernization projects. Before Pekin, she worked at State Farm as well, which is a pretty large insurance conglomerate in the US. Pekin, so if you haven't been to Chicago, so Pekin is around 2-hour, 3-hour drive from Chicago in Illinois. It's a nice city, and Pekin is one of the largest enterprises in that city, one of the largest employers in the Pekin area. I had the honor of working with Amy from maybe a year and a half back when we started working on the Pekin partnership. And it gave me a lot of insights into what the insurance industry looks like, what modernization in the insurance industry looks like, and especially the real-world impact of climate change and business, right? How that really melds together and how that really comes together. So to talk about this adversity in technology, let me introduce Amy Bingham to talk about modernization in insurance. Thank you.
Good morning. I hope you're enjoying the conference, and I thank you for being with me today, hearing a little bit about the story of Pekin Insurance. So I joined Pekin a little over 3 years ago, late 2021, and I didn't imagine the journey that I was going to be on over the next few years. In 2023, the company faced unprecedented losses, the worst financial loss history of the company. And that really created the case for change, the case to our modernization of WSO2. So I'm going to tell you this story today, which is a pretty exciting story, I must say, and we'll close out with how all of these unprecedented impacts resulted in a huge transformational change for this company. A little bit about Pekin Insurance. We employ roughly 700 people. We are located in central Illinois. We insure property and casualty and life insurance products. So property and casualty from a personal lines perspective, think your personal automobiles, your homes. From a commercial perspective, we also insure businesses. Business property, business autos, so such as fleets, also business liability. And then we're a life insurance carrier as well. We sell our products through roughly 1,500 agencies who then work with 8,500 agents to distribute our products. We operate in roughly 22 states, and we are on a state expansion journey. And if I didn't mention it, we've been in business over 100 years. So a company with a lot of history and a lot of legacy. Just to help me with the audience, I know we have 45 countries represented. Who in the audience is from the United States by raising your hands? Okay, so not very many. I'm going to do a little bit of an American geography lesson for you today because it is going to help you understand the impacts of what we went through in 2023. This is a map of where we do property and casualty business. So I mentioned we operate in 22 states. However, our property and casualty business is in 9 states. We are on a geographic expansion, so we are expanding to additional states over the next 10 years, but this is where we do business today. It's really important to note that central concentration of where we do business in the central United States. It's really important as I tell this story today and we talk about the impacts of climate change on our business. There's a lot going on this slide. This is a reference from Guy Carpenter. Guy Carpenter is a global risk and reinsurance specialist. We do a lot of business with them to understand our risk exposure. We do a lot of work with them to understand our modeling and how we need to adjust our business based on risks that we're facing. What this slide represents is in the year of 2023, there were 28 separate billion-dollar weather-related catastrophe events in the United States. This is an industry view. This is not just Pekin Insurance. This is industry-wide across America and impacts of weather events. Again, 28 events over $1 billion. I also want to point out, you'll see the central concentration of those weather events that are depicted on the map. Notice that where we typically see hurricanes in the Florida region, wildfires in the California region, you're not seeing a lot of symbolism there represented, right? So essentially, this really was the issue we were facing. In 2023, unprecedented impacts, these large events. Our largest peril is hail. So today, when you walk to the conference, you experience rain, right? A nice rain. It's definitely falling from the sky. You could put your umbrella up, mostly blocked you, right? What we're facing in the United States is it never just rains anymore. Everything is a big event. Large winds. You hold your umbrella sideways sometimes to block you because the rain is just coming at you sideways. Large winds. In the Central America region, we are experiencing storms that are producing hurricane winds, excess of 80 miles an hour. Tornadoes, I'm sure you hear a lot about tornadoes in the Americas, another peril that significantly impacts us. Hail, though, is our biggest problem. In the states that we do business, hail, sometimes the size of golf balls or baseballs, falling from the sky, imagine what that does to automobiles, to roofs on houses, to roofs on commercial properties. It is very impactful. So again, hail, the biggest peril that causes us concern. You tack this onto inflation, rising costs of replacement parts, supply chain issues that impacted us during COVID. Really, this was a disaster in every sense of the word. So I want to hone in just a little bit tighter on where we do business. Again, this is another depiction of those states where we primarily focus on. The two orange states there, that's Iowa and Illinois. Illinois is where we were domiciled. That's where our corporate headquarters is. Iowa a bit to the left. That is where we have the highest volume of insured value, and it's also where we have the highest storm propensity. The risk concentration in those two states is significant. Again, another slide with a lot of data, but this shows the trends and patterns of storm impacts on the United States since 1980. What this slide clearly depicts, climate change is impactful. The frequency, the severity of storms has significantly increased since 1980. And I want to point out the green on those bars, that's storm systems. So think thunderstorms. That yellow represents hurricanes. The orange represents wildfires. And when you think about catastrophes, because of media attention on those large perils, hurricanes, wildfires, there's a lot of media attention in the United States about those events. People assume that's what's driving up the cost of insurance. I will go to family gatherings and family members will say to me, Amy, I don't understand why I have to spend more for insurance. I don't live in a hurricane-prone area. True. Hurricanes, wildfires, that's not what is impacting these high rising costs. It is those severe storms. So what was the impact to Pekin Insurance? In 2023, we experienced a $170 million net loss on our financials. Huge, impactful, again, the largest loss in our company history. AM Best is an American credit rating agency that focuses on the insurance industry. It's really important that our AM Best ratings maintain a positive rating because many of the people that we do business with have requirements that they have to be with a carrier that has an A rating. We are rated A-, that is an excellent rating per AM Best. The industry as a whole in 2023, and I'm going to speak specifically about personal lines, experienced an outlook change of stable to negative. So AM Best said the entire personal lines industry in America is experiencing a negative outlook. They saw the patterns, they saw the trends. This was an industry-wide problem on many, many carriers. Pekin Insurance also did receive an outlook change from stable to negative, but we maintained our A- excellent rating. And that was so important because that really gave us the opportunity to rebound, to drive positive change for the business, put action into place, turn the organization around, and prove that profitability. So again, we escaped that downgrade, which was a really positive thing. So I also want to share, I'm talking right now about how the year ended, but we didn't wait for this to take action. We knew in Q2 of 2023, we were in trouble. The storm started earlier. The losses were huge. We could forecast and predict this was going to be a very impactful year for us, and we took action. This slide depicts the actions that we did take. So again, we made these decisions in 2023. In Q3 of that year, we started implementing these changes. We had a series of executive meetings. We made very quick decisions on how we needed to change and transform our business. They included things like we did a temporary pause on all new personal lines business. We stopped selling new product for personal lines, so no new policies for auto or homeowners. We continued in the commercial lines and the life space. We also exited the personal insurance market in Iowa. So again, you saw those two yellow states I represented earlier, Iowa being one of them. We completely exited that state for our personal lines product, meaning we non-renewed all personal lines business in that state. We also exited several product markets that had high loss ratios. So markets we just knew historically were not profitable. Things like mobile homes, things like insurers that only had their home with us but not their auto. We knew through historical data and data analytics that those lines simply had not been profitable, and we made the decision to exit those. We also exited our habitational market. Habitational is basically a fancy word to talk about landlords that own apartment buildings, those types of complexes. Imagine when a hailstorm comes through, the impact that it has if it hits an entire large apartment complex. Again, highly impactful from a loss ratio perspective. We also terminated unprofitable agents who were not giving us profitable business, and unfortunately, we also experienced company layoffs. Very hard decisions to turn our organization around. But where I'm very proud of our IT department is we responded rapidly and quickly. We changed our focus and our priorities to implement these changes. If you listen to Jeremy with McKinsey's talk yesterday, he talked about a product operating model, which is really an agile way of working as well. That is the operating model that I put in place when I joined Pekin Insurance. And we were positioned to take these IT teams and literally change their priorities overnight. This is where you need to focus. This is where we need to drive value to the organization, and the teams embraced that, doubled down, and started making the system changes to drive these organizational changes. The estimated impacts of these actions that we took, so the business decisions I just talked to you about, this is what we estimated would happen in 2024. An 18% reduction in revenue. Imagine that. Imagine your company intentionally going into the next fiscal year reducing revenue by 18%. When you reduce revenue, what's the next thing that you have to cut? Expenses. We needed to shave $70 million in expenses to offset that revenue reduction. A $70 million expense reduction was roughly 25% of our organizational expense. Significant. On the positive side, though, these changes were going to result in a 47% reduction on our total insurable value. That means the volume of property that we insured was reducing by 47%. That minimizes your risk, minimizes the potential for losses and claims. And then it also was resulting in a 53% reduction in storms and catastrophe exposure. So we knew if we made these changes, we would reduce our risk exposure by over 50%. So I think you're all familiar, regardless of what country you're from, you're familiar with the term adventure. Adventure is defined as an unusual or exciting, typically risky experience or activity. It's typically something, a word that we use that we want to create some energy. We say we're going on an adventure. Tell a little personal story. A few weeks ago, I was with my girlfriend. We decided to take a trip to California. She lives in Arizona. We took the 4.5 drive to California, spent a few days. We were coming back. Terrible accident on the highway. Both directions closed. Google Maps reroutes us. We're in the middle of Arizona, in the middle of a desert, okay? We are driving on dirt, gravel, huge potholes. I'm scared to death she's gonna hit a pothole, blow a tire, 2 females in the middle of the desert. You know, you won't offend me if you presume I'm not very good at changing a tire, right? And she looked at me and she said, Amy, this is an adventure. So we often use that word really when we're facing a pretty terrible situation, and we try to make a positive spin on it. This is what we told our employees. We were going into 24. We said, welcome to the adventure, right? We're gonna turn this organization around. So how does this relate to WSO2? Really, this intense focus on profitability and cost reduction, that was the catalyst for us to do this migration to WSO2. We had pitched this migration prior. Actually, before I had joined Pekin, our architectural team had done a lot of work to pitch this business case and proposal. It didn't get a lot of attention. Frankly, our business leaders didn't want to take the capacity off of more business impactful items like growing product, making enhancements. They didn't want to invest that capacity in more of a technology modernization. But I've learned in my career there's 2 business cases I can typically win. The first one is if I can show that a technology change is going to drive revenue or growth, that gets the attention of business leaders. Likewise, if I say, I'm going to save you a lot of money if you let me do this technology initiative, that also gets the attention. And in this case, we had $70 million in expenses we had to shave. It was pretty clear cut that this was going to be a great way to achieve that objective, but also modernize our technology. We actually did 2 platform migrations in that year, and you might think I'm crazy. Amy, your company is having the worst financial year and you're gonna do platform migrations? I always say I like a good challenge, and yes, we did. We did this WSO2 migration. We also migrated our digital payment portal in this same time frame as well. I will share, and typically I don't like to do any sort of vendor shaming on public platforms, but I will say this once because I think it's important for context in this dialogue. But we were a MuleSoft shop prior to our WSO2 migration. So we migrated from MuleSoft to WSO2. We did have challenges with that prior integration platform. Primarily, that initial implementation of that platform, it was done when we did a very large-scale digital transformation to our policy admin system, specifically Guidewire in this case. It was rushed. The focus was on cost and time, not on strong architecture and creating that composable architecture that you've been hearing about in our sessions today. The focus was on cost and time. Therefore, the implementation was very problematic. We were having difficulty finding experienced platform developers in Mule, and frankly, they are hard to find in the marketplace, and they do come at a pretty high cost rate as well. Our business priorities were constantly trumping platform modernization activities. So as I said earlier, the business typically wants to focus IT capacity on new business value and outcomes. So getting buy-in to focus on keeping this platform maintained and upgrade, that wasn't a large priority. We were facing end of life on the existing MuleSoft platform. So again, that maintainability was an issue. And then essentially, it was very costly. So with the recent acquisition from Salesforce, we continue to see those prices escalate and rise. So that was also another factor. Our strategy was really quite simple with moving to WSO2. We needed to improve our risk posture. We needed expense reduction. And we needed enhanced quality, simplification, and ease of maintenance for this platform. So why did we choose WSO2? And that first line up there, I want to give some context on that. I'm citing 50% projected cost savings or avoidance over the next 3 years when we did this implementation. That does compare the cost of an upgrade in our existing platform. Because we were so out of date, that upgrade was essentially going to be about as much work as a full migration. So the cost of that upgrade was factored into the overall cost savings, as well as WSO2 just frankly being a more affordable platform. Of course, we see them as a visionary in API management. The Gartner Magic Quadrant showcases WSO2 in that way. We considered it having a flexible architecture, ease of maintenance, and it's secure and stable. We expected to see more ease of recruiting engineers to help us support the platform. And then we saw really at the onset an excellent partnership and relationship. When I make decisions as CIO, who I'm going to do business with from a technology perspective, that vendor coming to the table as a partner and really seeing our success as their success, that is a key decision-making point for me. I saw that. Sanjeeva flew out personally to talk to us about this migration, and I had confidence through these engagements and conversations that that partnership was going to be there. A quick summary of our approach. We did do some early POCs to prove out the technical feasibility, the performance. Our integrations are vast. We are primarily a SaaS-based shop, so we rely heavily on our integrations to connect all of our systems, both internally, externally. Again, proving that out through a POC was very important. We did have to double down on creating our design artifacts from scratch. Again, as I mentioned, that original implementation, there was not a lot of focus on that. So we had to take time and energy to make sure we had our designs solid, the architecture was solid, we had the documentation to support that for long-term supportability. We took time to train our WSO2 software engineers just to make sure they were ready for this migration. And again, we did a full-scale migrations, all enterprise migrations going to this new platform. We had business logic embedded in our prior integrations. They were very monolithic. We had to take the time to break them down and do this right. And if I can give you any advice, please do not ever lift and shift a bad architecture into your new platform. Take the time to do that redesign, that re-architecture to make sure you're doing it right. That was an investment. We did iterative development and deployment. This was not a big bang implementation. Over the course of this effort, we were iteratively putting these in production, realizing the value of that along the journey, learning, adapting. So again, very much an iterative deployment. We projected 8 months for this project. And here we go dark. The project actually took 14 months. And I just want to say, don't perceive that as a failure. I know sometimes people, get locked in on project timelines and they feel like if you don't meet that original timeline, it's a failure. This was not a failure. Our success criteria was to do this migration right, to correct some of the things that were done wrong initially with the design and architecture issues. So we focused our attention on making sure that we did this right. I'm a huge believer in agile ways of working. That's what agile is all about. It's about being adaptable, being flexible, responding to change, responding to your learnings and the risks that you uncover as you're doing efforts. I'm going to keep going because I know I have my slides here, but the monitors are coming back up. And in the spirit of time, I'll just keep going. So I'm going to share with you a little bit about how the story ended.
You're a visionary.
What's that?
You are a visionary.
Right, yes. This is 2024 year in review, also from Guy Carpenter. This slide doesn't look much better than 2023, does it? 2024, the United States experienced $27 billion weather-related catastrophes. That's the second highest in history, second to 2023, okay? So the climate landscape did not change. The storm impacts were essentially equivalent of what we saw in 2023. Because of all of the changes that we doubled down and made at the end of 2023, we had a 65% reduction in storm losses in 2024. Had we not implemented the changes that we made, the company would have faced $88 million more in catastrophe losses. That is the impact of those changes that I showed earlier on this slide. So how did we end the year? 2024 truly showcased our resilience. We experienced a $44 million net income in 2024, surpassing our goal of 11.2 million. Remember, in 2023, we had a $170 million net loss. And in 1 year's time, that turned around to a $44 million net income seemingly overnight. This is the most profitable year that we've had in almost 2 decades, to put it in perspective. So we really transformed the company. IT showed up to deliver the outcomes that our organization needed at the time that they needed us. We changed our mix of business. We exited unprofitable products. We reduced our risk concentration. We doubled down on expense savings, and WSO2 was part of that journey to realize those expense savings. We were quick, we were nimble, adapting because we had the technology available to let us do that. So for 2025, we have a new corporate campaign. We've reached new heights. And we need to maintain this path to success, right? We have set the foundation. We have stable, reliable, secure platforms in WSO2 that connects to all of our enterprise systems. And this is what we need to take our organization forward. I will also say, I hope that I don't have to go on any more adventures anytime soon. That will be perfectly fine with me. And if you look at our website, at Pekin Insurance, we have our mission, values, and vision on our website. And as I was preparing for this presentation, it gave me a quick reminder of just how much that we have embodied what we strive to be over these last 2 years. We are quick to communicate, respond, and solve issues. We're innovative in our products, our technology, and our thinking. We're nimble in the ways we adapt to challenges. And we're tech savvy with modern, easy ways to do business with us. And I don't want to lose sight of, I know I talked a lot about profitability in this talk today, but at the end of the day, Pekin Insurance exists because we make a promise to our customers. That promise is when you are facing terrible situations, whether it's the loss of a home, a terrible accident, or an extreme unfortunate loss of life of a family member, we are here for you. We are here to keep that promise in sometimes the worst times of our customers' lives. And the only way that we can do that, the only way we can keep that promise is if we're profitable. So with that, I want to thank you to WSO2 for being a part of our journey toward modernization and having the technology foundation to take our organization forward. And I want to thank all of you for being part of this and hearing my story today that I'm so very excited about. So thank you. I hope you enjoy the rest of your conference.